Guys, now I see that the sound was gone. So once more, welcome to Price Action Training School, Master Candle concept. Okay, so today we will talk about Master Candle, but since we have already covered Master Candle in one of our previous webinars, today we will expand the concept that we will be using it also in our live trading setups. Master Candle concept is today's agenda, and before I begin, standard risk disclaimer explaining that CFDs and forex trading are leveraged products and can result in losses that exceed your deposit. So this presentation and accompanying video is for informational education purposes only. This video is not part of the .uk website but the globalnews.com website. So my name is Nenad, and today's agenda: defining Master Candle, benefits, how we trade it, and charting. So again, guys, for all of you who are new to our price action concept, the school actually covers all most important price action concept that you can find in a world of forex trading. Of course, I'm always providing my personal opinion only, and definitely my favorite dimension for trading is, of course, price action. So we need to define Master Candle, we need to see benefits, we also need to see real chart examples. So this is the example of a Master Candle, okay? So it's a bit of, I can say, easy to track the Master Candle. So it's not very hard to spot a candle, but you know what is most important here? The most important thing here is the patience. You definitely need to be patient enough in order to spot Master Candle, because definitely it's not an easy way to spot it, especially, guys, if you need to check charts every single moment. But because of that, actually, I've developed a rule where we are looking for Master Candle only on 1 hour time frame. And once Master Candle shows on our charts, we need to place 2 lines like this and actually define the Master Candle range. That will be very, very useful if for subsequent retests of Master Candle zone, because usually after Master Candle is retested, next break, the additional break, can serve as a confluence point on your chart. So Master Candle concept is used also for breakout trade setups, but have in mind that we can also use it for confluence. So let's first describe what a Master Candle is. If you see a candle, let's say that has 35 to 150 pips range from the top to the bottom or from the bottom to the top, including wicks, it is the first step towards defining Master Candle. So you need to find a candle that has high to low from 35 to 150 pip. Then next 4 candles, you see here I have marked it with a red, 1, 2, 3, 4. Next 4 candles should be contained within the range of the first candle. So you see 1, 2, 3, 4. 4 candles after the first step, okay, after this main candle, actually confirm the Master Candle. So this is the first candle, 1, 2, 3, 4 candles inside it, confirm that this is the Master Candle. Now, the first, the second, or the third candle after the 4th one should break the lower part of the range or upper part of the range. We don't know where the price will go. We don't care. We are there to trade it. So the breakout can happen either here or either there. Usually breakouts are very successful and accurate. But sometimes you might actually see that those breakouts can be a fake out. So let's say that if it breaks to the upside like 5-6 pips and then it gets into the range and breaks to the downside. we can protect against fake outs. I will teach you a simple trick that will actually serve you well if you know how to use it. Because usually if we see a fake out, next breakout is successful. But as I say, let's say like 60% of breakout to maybe 65 to 70% are usually successful. The thing is that master candle concept is always defined within these rules that I'm telling you about. So 4 candles after the first candle define the master candle, then the first, the second, or the third candle should break either up or down. Well, sometimes, guys, it may happen that these candles actually get into the range again, like this. You see here this example, and we can estimate whether the next breakout again will be successful or not. So this is a small expansion to existing concept of master candle. So first, this is the rules. This is the cheat sheet. Okay, so you need to remember these rules. Of course, this webinar is recorded. It will be uploaded. But you see it here, guys. Define master candle. The first, the second, the third, and the fourth candles within the master candle are called setup candles. Okay, the first, the second, and third candle after the fourth setup candle need to break master candle high or low for a breakout to be valid. So those are fixed 6th or 7th candle after master candle. Now, valid master candle has 30 to 150 pip range depending on the pair traded. But whenever we see, well, let's say 35 also, it does not need to be a perfect 30, it can be 35. Okay, we can define it more or less. The margin is not below 30. We don't go ever below 30. Okay, depending on the pair traded. Usually, guys, if you trade pound yen, let's say, strong candles in pound yen breakouts can really be even higher than 150 pips sometimes. Of course, not always. But I don't really go higher than 150 or lower than 30. Buy or sell entry is placed 3 pips plus spread above or below master candle high or low. So in order to trade master candle successfully, guys, you need to know really which pair to trade. So the main thing is that you need to see a breakout, but you need to cover the breakout with the spread, because breakout means nothing if you actually don't cover the spread. So it's very, very important, guys, that you cover the spread. Okay, well, that's why, let's say, pairs that have very low spreads, of course, are most suitable for that. The question, what qualifies as important? Only 1 hour time frame. We trade only 1 hour time frame. Okay, so this is 1 hour time frame. Whenever you see this on 1 hour time frame, that will be the master candle. There are no other rules. This is not, guys, this is not rocket science. This is very simple. There are no trend lines, H4, H1, 3 days previous guy's low. Not important. This is 1 hour time frame. You see, the candle has been formed, breakout has been successful. Now, use next support resistance level for TP, or we can use actually pivot points. It's also valid. And of course, no trading if the price is close to important support or resistance level. So if the price is very close to important support or resistance level, guys, of course, we don't trade. So again, this is 1 hour time frame. 1, 2, 3, 4 candles after this candle define this as a valid master candle. Then you see the breakout was here, then we had a drawdown, and then it went down again. Okay, so this is very, very easy actually. You don't need to really think twice when you see this. You only need to, you need to be able to spot it and you need to be patient enough to spot it. So what I actually suggest is to scan 1 hour time frames for any master candle, but it's always, guys, best at the top of the hour to see if there is any master candle existing on 1 hour time frame. You of course need you need to be able to spot it on 1 hour time frame. Okay, that is very important. Stop loss can be twofold. There is so-called aggressive, but also, guys, there is conservative stop loss. Aggressive stop loss is placed 5 pips above the candle, the setup candle for short trades, the setup candle that has the highest high. So in this example, this is where we would have placed our conservative aggressive stop. So 5 pips above the highest high of the setup candle. Conservative stop loss is placed 5 pips above the master candle. Okay, so this is how you place your stop loss. Of course, you need to trade within the risk. It doesn't matter how big this candle is, as long as you keep your stop loss defined within the boundaries. I usually use 0.5 to 1% of risk. Okay? You need to understand the basic concept of risk, of the leverage, and then, of course, you will be able, I mean, it's very easy to calculate it, but if you don't know, guys, you always should trade with fixed risk, and your stop loss can be dynamic. That way, you would avoid big swings on your chart and your account. This is also, we can see 2 examples, both are long. So first, this is master candle. Okay, now is this confirmed master candle? 1, 2, 3, 4 candles inside it. Very good. So it's confirmed. The first candle did nothing. The second candle actually broke this high by 3 pips, and it went 40 pips in profit. Now our stop loss could have been placed here or there, 5 pips below this level or 5 pips below this level. Next setup, 1, 2, 3, 4, this candle has, let's say hypothetically, this candle has 40 pips, okay, and 4 candles after that, okay, is actually a good master candle. Then the next candle, well, it actually breaks out to the upside. Farid is saying in this example, risk reward doesn't look appealing. Well, a lot of times, guys, when we trade, risk reward does not look appealing, of course. But if you trade within the risk, then you should be safe. Because, guys, usually when you trade breakouts, let's say simple triangle breakouts, you will never have really a perfect risk to reward. Simply said, because, guys, today's trading is not the same as it was 5-10 years ago. Volatility is higher. We have always something very important happening in the markets. Okay, every time US president comes out and says something, market moves. Every time ECB president Draghi is saying something, market moves. Every time oil goes up, dollar CAD moves, right, up or down, depending on oil direction. Every time some bank, let's say there is an important bank statement, let's say that some bank publish a statement, pairs go really up and down. So, you know, for intraday trading, you will never have, I mean, rarely you will see a perfect risk to reward. So simply said, well, what I do usually if I trade is, guys, I simply keep my risk within the risk boundaries. I really don't care much about risk to reward. Because let's say, guys, this is master candle, right? But it looks a little bit obvious that this could be a long trade, because you see this candle. This could even be high volatility setup, guys. You know high volatility, 61.8, 78.6, 88.6 retracement of Marubozu candle. You know about it. We already covered it. So this could have been also trade here. But from master candle perspective, this was very, very obvious it will go long. So I really don't care. If I put my stop loss here, let's say, I would use 1% of risk here. So I would actually take some pips and go out. It isn't perfect. But well, if you lose, you will lose only 1%. Because guys, sometimes you will have better setup. Watch here now. From this perspective here, risk to reward is much better than here. Because if you enter here, okay, you also had like 40 pips, but your stop loss would have been, well, much, much better than here. Okay, at least 2 or 3 times better than here. So here, let's say we can use 1.5% of risk. I mean, guys, everything in Forex market is picking good entries and doing everything with a proper risk to reward. It's very, very important, guys, to know about proper risk to reward. So Nyman is asking, can you go with extreme scalping on master candle breakout? Well, Nyman, I didn't understand your question. If you mean, can you do it on 1 minute time frame? I don't do it. I mean, I haven't tested it on 1 minute time frame. I just watched 1 hour time frame, and from time to time 4 hour time frame. But I'm really more into 1 hour time frame trading. Master candle benefits, well, simply said, that could be a true breakout. It means that those breakouts are usually confirmed, and those breakouts can be much better than standard breakouts. No bias. Simply said, you don't have any bias for trading master candle breakouts, because guys, you watch whether the candle will break out to the upside or to the downside. So you don't have any particular bias. The best thing is to keep it out of bias. Nyman is asking, if you spot a breakout coming, can you zoom in and scalp? No, we only do it on 1 minute, on 1 hour time frame. So 1 hour time frame, it's simply, you don't need to zoom it. I will show you the examples also on the live chart. You don't need to zoom it. And of course, this webinar is recorded and it will be uploaded tomorrow. So you will be able to watch it again. So it's a true breakout. We don't have any bias. We go up or down. Of course, we go up and down or down on candle breakout. It's always about the zone, okay? Always about the zone, because as I said, we can use the zone for next confluence spot. Because if we see the zone, and if we see that this zone is having a confluence with other factors on next break or next retracement, we can also count this zone as one of confluence points. It's very, very strong. Master candle concept is very strong. Because of that, guys, you will see that usually master candle setups are really much, much, much respected. The zone is predefined. It means you don't need to think twice about it. The zone is once spotted. You need to put the trend lines, and that will be your breakout spot and future confluence point. So it's predefined zone, and actually it's easier to trade when you have already predefined a zone, and it's accurate. Okay, we don't count risk to reward ratio, but actually we count successful breakouts. And it's been really accurate, because usually those breakouts are accurate. So these are examples. You see some of the examples. This is high, this is low, this is the candle that fits with our rules. It has more than 30 pips, less than 150 pips inside, okay? And 4 candles have been contained within the candle, marking this candle as the master candle. The second candle broke through the roof, and you saw what happened. Here also the example, we have a master candle, very good Marubozu candle. This could have been also a high momentum setup here. We already had a lesson about high momentum, so this could have been a very valid setup. And the master candle, 1, 2, 3, 4 actually. This is the count. 1, 2, 3, 4. And the first candle after the fourth candle broke through the roof and went up, making again good pips to the upside. Now, what are subsequent retests of the zone? So let's see, guys, here, this example. You can see it here. 1, 2, 3, 4. But we didn't have any breakout. The first, the second, or the third candle didn't show any breakout. But you know what important thing is? This is the zone. So you don't trade any breakout, because there was no any breakout. Simply said, this was confirmed master candle setup that didn't have any breakout, because the first, second, and third candle didn't break the top or bottom. But what is important, because the price, when it entered again in the zone, it started to consolidate. So from here, from this zone, we would expect next future bounce or drop. So that is why this can be actually good for spotting up confluence points. Okay, so let's say that you want to go long. You know that this is the zone. There was no any breakout. We haven't seen any breakout. But if you draw Fibonacci from this part to this part, here within the zone, you will also see retracements. You also have a trend line. So what we think is, usually when we see this, that the price can probably spike from this spot. So if you make a positional trade here, you can make additional breakout trade if it breaks the zone. It doesn't matter. This wasn't a master candle breakout. But if we talk from standard breakout perspective and POC zone perspective, this is the part of the zone, and this could be the part of continuation breakout. So it's very important that we spot it, okay, when it happens. Because next time price gets there, it will probably make a retest of the zone, and then it will proceed. Now, what are disadvantages, guys, here on our master candle breakouts? It's very hard to spot. The first thing is, as I said, you need to be patient enough to spot a master candle breakout. So you really need to be patient. Next thing is, it takes time. Simply said, not many traders have time to spot master candles. But if you had time, well, you would definitely need to make sure, and you need to make sure that you try to spot it at least once per day. Every hour, when hourly candle closes, scan your charts for any possible master candle. Try to see if master candle is setting up. If the master candle is setting up, then you can actually leave it on your chart and come in 1, 2, or 3 hours to see whether it's a confirmed candle, and you can go with pending orders. So it takes time, right? But also it requires focused attention. So if you want to spot the master candle, you really need to be focused, guys. It can distract you from other things like scalping, especially scalping, if you are scanning for master candle setups. But those disadvantages are really not strong. They are not justified when we know that master candle really has more benefits than disadvantages. Now, how does it look on live chart? I prepare some of the examples, guys, for you to see. So let's say this is, well, this is euro dollar. Master candle is here. This is master candle. So first, the high is 709. The low is 677. So this is 32 pip. 32 pip master candle. This was the breakout. Yes, 3 pips. The spread on ECN is very small, 0 point something, 0.34. So this is the breakout. We could have placed our stop here or below this level, but what happened is, you see, it went to the upside. Now, watch this. The price is retracing towards the zone. So when the price, if the price hits the zone again, we can analyze charts and see if that could be a good time to place another long opportunity there. So this is now confluence zone. So this was a good breakout, you see? 1, 2, 3, 4. Well, yeah, guys, actually this was not a breakout because, yeah, because of this. You see, it was 6 candle after the setup candle. So this was not a good breakout. But it doesn't matter. Okay, let's say that we didn't take a breakout trade, but we just marked the zone. So what happens here? If the price gets in the zone, we can analyze if this is a good POC, and this is another part of the confluence. Because here we might expect that here the price could reject to the upside. Also, guys, if you took a counter trend setup, you know that here in this zone you should take profit. So master candle, you see, it actually gives us setups. It can give us a confluence zone, and it can actually protect our trades. Let's see another example. Here we have a confirmed breakout. Okay, the second example, but the first example, again, 1, 2, 3, 4, 1, 2, 3. So you see, there was no breakout on master candle, but what happened? The price went down, made another master candle. That was good. 1, 2, 3, 4. The first candle here it is. The first candle there actually confirmed the breakout. This one. Place your stop 5 pips below the level or 5 pips below this level, and you see what happened. Price went strongly to the upside. So this master candle was confirmed, and it had a valid breakout. Okay. So what happened here, guys? You see, this was the zone. We had a consolidation, but what happened? The gap. This is important. The gap, guys, watch where it was retested. Gap was here. It retested the lower bottom of master candle, and it went down. Watch how good it was. So you see how this master candle can be really important. It gives you the zone. It gives you next confluence point. You see? Gap, retest of the gap, and it went down. Let's see if we have other example here. No. We can go to this example. Okay, here guys, we had two master candles. So 1, 2, 3, 4. The first, the second, the third candle broke the top. Overall 15 possible pips. Then you see what happened. The price actually retested the zone. Another retest. 1, 2, 3, 4. Another master candle. And this candle actually pushed the price heavily to the upside. 40 pips to the upside. So you see how master candle can both break out and make you the zone where the trades will be executed. Here. See, it went there, broke down, went there, went up, and there again. So always try to define both breakout and the zone. You can use daily pivot points, of course, because daily pivot points were good on 1 hour time frame. Okay? So yes, the answer is you can use daily Camarilla or other daily pivot points. Okay, here guys, I'm scanning now. Let's see if we had another good setup for master candle. Okay, this was master candle here. Master candle. One, let's see the high, the low, 30 pips. 30 pips, this is master candle. 1, 2, 3, 4, confirmed master candle. But you see, next 3 candles didn't break to the top. Sometimes, you see, it happens. If you miss a breakout trade, then next few hours can also give you breakout. I particularly don't take those trades, but I might take this one. This was very logical for me because there was no breakout, but still the price was within the zone, so the zone didn't break to the downside, so this breakout could have been valid here also. So could have been valid here indeed. You see, when it dropped in the zone again, what happened? Breakout below the lower part, consolidation, breakout to the upside, and now it's rejecting. It's rejecting this zone. So you see, it's very, very, very good to spot it, and it can be very powerful. Let's see another example if we have it. Yeah, the master candle here. Perfect, guys. This is Marubozu. Very good. Perfect. High to low is 49, 50 pips. 1, 2, 3, 4. The third candle here. Okay, this was the third candle, but let's see. Well, this was a breakout. Yeah, this was fake out. Great example. Now, this actually gets me back to the beginning of the webinar. If you used 0.5 risk or 1% of risk, you would have lost your trade, right? But then you can add 1% more of a risk or 2% more if your daily risk limit is 3%. Because you lost here, if you add 2% here, if you lose, you would have 3% of risk. That is okay because it fits your risk limit. But here, actually, the trade was successful. So that is why I say, watch for initial breakout. If it fails, like a fake out, then next breakout could be good, usually to the opposite side. So we lost this trade, right? But then we had a breakout here. We can trade it. So 1% of risk for one trade, let's say to 2% for second trade. So you need to keep it lower than 3%. So you see, this breakout was very, very good. Well, sometimes you will see a fake out, but now you know what to do if you're actually caught in a fake trade. Let's see, master candle here. One, two, three, four. First, yes, this was probably a good trade. Well, it was 2 pips. This is 3 pips breakout. And to the upside, 32 pip possible. And here, you see consolidation again, breakout, consolidation, breakout, dropping below, then consolidating within the boundaries, going up. We don't use MACD stochastic indicators with this. We only use naked trading. We don't use indicators, and we don't trade in the direction of main trend. We trade in the direction of breakout. Okay, so here we are interested only in breakouts. Let's see one more example, guys, and then you can ask me questions if anything is not clear. Master candle here. Actually, this, well, this is not ideal, guys, but sometimes you see it's just this week, 1 pip of wick, but watch. 4, 1, 2, it went down. The stop, I already explained about the stop, guys. You will see it here better. So let's say that you have used the breakout to the upside. Aggressive stop 5 pips below this level, conservative stop 5 pips below this level. Example here, definitely 5 pips below this level. Let's use real chart examples. Okay, aggressive stop loss 5 pips below this candle. Conservative stop 5 pips below this candle. Your risk should be 0.5 to 1% for the first trade, and if second trade happens, then you can risk 1 to 2% more for an overall total risk of 3%. New traders should keep the risk within 2% per day, not more than that. Okay? Let's see one more example. Oh, we don't see here. Here. No, this was not. Oh, I mean, this could be good again, guys. Oh, no, this was not good. No. Let's see. We really need to follow rules. We cannot make up our own rules. This is defined, so here. We might say eventually this was the master candle because these breaks are not that good. So, well, this could be breakout where you would place your stop here, 5 pips below the level, or 5 pips here. Let's try to find some good scholastic example. This is it. This is example. Master candle confirmed here. Here is your entry. Your stop loss would be below this level, 5 pips. Okay? So if you have any questions, guys, you can ask me. If anything is not clear, you can ask me. This concept is important. It can be used also within the confluence, and breakouts that happen with master candle are usually accurate. So I don't see any questions. I guess, guys, this is easy, right? There shouldn't be any problems with this. Okay, just a quick reminder now, guys. Actually, a quick reminder for you. If you have the time to vote, okay, for Admiral Markets and myself, definitely we have the chance to, I will show you now. This is the link, okay, here. You can use this link to actually vote, and voting is only 2 more days. Then it will be stopped here, guys. See, by using this link, you will get a set of questions. You can vote for us, support us, and, well, you know that Forex Street is one of the leading websites in the world of Forex trading. And it's really an honor to be voted in the top 5 of course, best analysts and speakers. One question I have now is actually, yeah, is the body important? Well, I said it here. Ron, you probably missed it. You need to have 30 to 150 pips range. But here, the top and the bottom of the wick, there should be your range. The top and the bottom of the wick. Okay, here, you see 30 to 150. This is the range. Not less than 30, not higher than 150. It doesn't matter if the body is small, if it's like this, or if it's like this. High to low is what matters the most, guys. Okay, high to low. It matters the most. Okay? So that is very important for you, guys. Very important for you to understand. Ron is asking about example at Euro Australian dollar. Let's see. We can see if there is any master candle. Yes, this could be master candle, Ron, indeed. Let's see high to low. Yes, this is a valid master candle, 34 pips. 1, 2, 3, 4. Okay, so next 3 candles, if they break, well, it could be a tradable setup. Of course, just pay attention. FOMC decision is in an hour and, like, I think an hour and 15 minutes. So pay attention to FOMC. But generally, it could be good as the master candle breakout. Indeed. Yes. Okay, guys. If you have anything more to add, just ask. This is recorded. It will be uploaded. And on 22nd of February, we will do also live trading sessions on Wednesdays. So in addition to session recaps, you will get setups for the rest of the week on Wednesdays. Or if we see some market orders, we can also trade it. Let's see what will happen. But thank you guys for your support. I don't see any further questions. As always, I'm here to support you and help you. And definitely, guys, don't forget to follow us and vote for us. And we really appreciate it. Thanks a lot. Talk to you soon. Cheers. And as always, trade safe.